Let's connect with Sajeev Dhawan, Managing Director with JB Capital Services. Sajeev, good to have you back. Good morning. Thank you for joining us. Sajeev, let's start with the moot point. What exactly are Indian markets expecting from this winter session of the Parliament? The day one was a washout, and do you think that will disturb that will disturb markets going forward?
Morning, Nikunj. Well, I think there's clearly a lot of expectations, hopes, maybe more from the foreign institutions and the large investors who've put a lot of money into the country over the last several months and continue to do so. Domestically, you saw yesterday, as you mentioned, the washout, but the markets didn't sell off too badly. It was quite volatile. So I expect that volatility to remain on the Nifty. And as you mentioned earlier, I think it's going to be very difficult to trade the Nifty over the next few days. There has been no clear breakout. Levels are coming both on the long and the short side, and stop losses are getting triggered both ways at the moment. Currently, we'll be slightly long on the Nifty, maybe go a bit more aggressively long if it crossed 56.60, 56.70 in the futures. But apart from that, there's no real domestic triggers. Interest rate cuts talk will start in January. Results again will come in January. So it is only the Parliament session and the global news flow which will shape our markets over the next 2 to 3 weeks.
So Sajeev, just a word on the globe, considering it seems like, at least in the near term, while the Parliament session has something conclusive, or constructive rather, by way of news flow, what do you think is going to be the news flow like when it comes to the data points coming out of the Eurozone, with Spain and Greece being topical, and of course the fiscal cliff as well?
See, Aisha, on the European situation, we've always maintained that's not going to disappear, and the news flow is, it might seem slightly better that the bonds are sold and they're raising more money and they're throwing more money at the system, but the system is broken and it will not improve. So I think you're going to expect a lot of relatively positive news flow, or lack of too much negative news flow from Europe, which will be considered a positive. But more importantly, the US is doing better. There is a lot of improvement in the data there, and the ground level reality suggests that things are definitely getting better from the US. So that, I think, is the main positive trigger from the global news flow. The fiscal cliff, which everyone is now discussing, has always been there as a serious problem. And again, they've got some serious issues to resolve it, and there's no clear solution. Are they going to cut the taxes, increase taxes? How are they going to sort this problem out? It's trillions and trillions of dollars. I mean, they'll have to do something really drastic, and politicians just can't make those sort of measures. If they cut for example, their arms spending for a year, they would knock off a few $1 trillion probably off that deficit. But simple things like that, which looks simple in theory, are just not going to happen. So I think the news flow will certainly not be that positive, but there's still a lot of appetite for India. 5.5% growth. We're still attracting a lot of fund flows, and if the data points improve over the next couple of quarters, the hundreds of thousand crores you've seen this year could easily be exceeded next year. So from that sort of viewpoint, I would still remain a buyer on the dips and be slightly biased on the bullish side on any correction in the markets.
Okay, the other talking point would be the disinvestment news. The floor price for Hindustan Copper has been fixed. The exact quantum of NTPC stake sale has been decided. Sajeev, what is your understanding? What kind of reception do you think these divestment candidates could generate this time around? Because ONGC, NHPC and NTPC second tranche was a complete failure. Do you think this time around it could be different because government has priced the Hindustan Copper issue rather smartly?
Well, yeah, just because they're definitely trying a different strategy with a floor price of 155. Let's ignore the price rise yesterday in Hindustan Copper. So let's say the price in the market was anywhere between 200, 220. That's still a 20% plus sort of discount on the floor basis. And they're doing only 4%, which is a relatively small amount, maybe 500 crores plus. So let's see the response. I think retail investors, when they look at the price in the market and the price they're getting, will certainly look at it. It's too small an issue, I think, for a lot of larger institutions, so they may look at the second tranche, but at least it signals a shift in the thinking of the government and something a bit more aggressive to push through these sell-offs, because as you mentioned, the last batch was a complete disaster. So I think it's positive that they're trying something different. As an investor, Hindustan Copper, still not the cheapest stock, even at 155, 160, but I think that one should go through reasonably well. The timing is a bit of a concern because the markets, with the holiday season coming up, will slow down. So I think they need to get this through quickly. There should be no delays. And then if it has a good response, January, February, they'll have to push things very quickly, and hopefully that the market sentiment remains reasonably bullish.
Sajeev, do you think in the near time the springtime for Tata Motors is over? Because the big moving part for Tata Motors was the JLR business, and the JLR business is slowing down.
See, the stock has had its good run. The only problem was that I think too many people were bullish on the stock, so there was a lot of maybe over-ownership. So it would need a lot of follow-on buying to take the stock higher. But having said that, I think we focus more on the DVR because that's just a cheaper way to approach the stock. If it came back to 150, again we'd buy. And our call has remained the same. You buy that 150 to 155 levels, and you lighten up at around 165 to 170 levels. And that's the way it's sort of played out. So again, I don't think many people would have lost money in the stock. So again, if you're patient and you have a 3-month sort of time frame, start to accumulate. And I'm sure come January, Feb, as the markets rally again, that Tata Motors will give you another 5 to 10% upside.
Sajeev, the new pharma policy has been approved. What would it mean for some of these pharma majors?
See, in the short term, again, Aisha, the news would be factored in. The negative sentiment, which was there, it would have happened yesterday. But you've seen these stocks have a phenomenal run-up in the last 1 year, and the market is clearly rewarding sectors which are moving strides, which we've discussed several times in the show, is inching towards 1,000 rupees. And fundamentally, does it justify it? I'm not quite sure now, but there still seems enough appetite. So if stocks like Lupin or Cipla corrected on the back of their good results, this policy and the price effect, yes, it'll be a short-term impact, but again, I think enough buyers would come into that sector. So pharma as a sector is still likely to be a market performer or even an outperformer in the next financial year.
Sajeev, for